This is Frontier Update, the very last edition for this week. I'm Temple Ashaji. Thank you for joining us on the program. Of course, joining us today for analysis, we'll start with the lady, Omotayo Idu, joining us from Greenwich Merchants Bank, Lukofojepe from Festival Capital, Valley Cancer, joining us from Rich Frontiers, Nairobi, Kenya. Bosun Amofaya, executive editor here at Frontier Africa Reports. Thank you, gentlemen. Thank you, lady, for coming on the show this morning. We'll see off with the markets where Nigeria was down 0.60% yesterday, Thursday. RVM was positive 0.48%. Ethiopian Stock Exchange jumped on leads by some 0.23%. Nairobi Stock Exchange marginally up 0.09% on Thursday, while the Johannesburg Stock Exchange was positive by some 0.38%. Only the Nigerian stock market was negative among the markets that we track. Eastern African headlines now. We start with the reports that is coming in about sub-Saharan Africa economic freedom improving, but much too slowly at this point. I think that references the fact that Morocco is actually the best performing in these indices. Kenya removes maize imports ban from Uganda and Tanzania. Mauritius Barak Fund wants investors to approve the spinning off of illiquid holdings. Tanzania annual inflation softens to 3.3%. Bank of Kigali gives 1.74 billion Rwandan francs to SMEs. Moody also places Ethiopia's B2 ratings on review to downgrade. Ali, let's get your thoughts on these headlines, these rich headlines before you.
So yes, let me go sequentially. Sub-Saharan African economic freedom improving, but too slowly. This is clearly the case. We've seen a lot of internet shutdowns. I was just reading a report around that, talking about $300 million of losses, particularly around election times where countries have closed down. And I think, most of us Africans are hoping that the African Free Trade Agreement is going to be a little bit of a silver bullet in this respect, and release our citizens to do business across the continent and improve the general economic freedom index. Kenya removing the maize import ban from Uganda. This was obviously, Kenya said that there was contamination. A lot of our neighbors were very unhappy, felt this was a non-tariff barrier, and obviously pressure has been brought to bear. And in the circumstances, I think I have not been able to see what the actual scientific analysis was, which I think Kenya should have produced, frankly. It would have been strengthened our hand, but that was not produced as far as I can see. So that's a positive development in terms of the region. Mauritius Barak Fund. I mean, this was an interesting piece of news I saw. $1 billion, Pricewaterhouse stepping down in 2019 as auditors, talking about 52% of the fund being in illiquid and hard to realize situations. This is essentially trade finance. I was quite taken aback by the amount, because normally in trade finance businesses, you tend to be over collateralized. You've got a product going from A to C, you're financing that shift, and you tend to take a haircut on the underlying assets. So it'll be interesting to understand more as to what exactly has happened here. This was set up by some South Africans with about $300,000, grew to $1 billion. But now obviously quite problematical, and it'll be interesting to dive deeper into what's happened there. Tanzania inflation soft, 3.3%. Look, Tanzania is an agri-based economy. As you know, food prices are at the highest they've been for nearly 10 years globally. Big concern of mine now, because the food basket makes up a much bigger percentage of the spending of poorer households. And you remember the 2011 Arab Spring was kicked off with, one of the reasons was the price of bread. So we've got to look at that very, very carefully. But for Tanzania's case, they're in an advantageous position. Of course, there is tremendous uncertainty about where Magufuli is, how well he might be or not. There have been stories that he was in Nairobi and then airlifted to India for health reasons. Other folks are saying he never left Tanzania, but he has not been seen for about 2 to 3 weeks. So you've got this political uncertainty right now at the apex of the Tanzanian government. And just to finally go off, Moody's putting Ethiopia B2 ratings on review. Yeah. Just to give you, if you compare Ethiopian Eurobonds 2024 maturity, they're trading at 9%. Kenya's around 3%. There's been a big sell-off already ahead of this Moody's review for downgrade. And what they're saying is about the DSSI, they're saying that if you go into the DSSI program, that program is going to force private bondholders to be treated in the same manner as others. So this has important ramifications for many countries that are going into that program, and for bondholders who have Eurobonds in countries which go for that program. So need to keep an eye on that. Ethiopia, of course, coming under heavy pressure from Secretary Blinken and Biden's administration to allow an independent investigation into the Tigray province. I am extremely bearish, up-temple, about what is going on in Ethiopia. I think essentially the genie's out of the bottle, and you've now got a situation where you're going to see risks of fragmentation. The center cannot hold. I don't think Abiy got into this and understood the risks of fragmentation, and increasingly it looks as if it's spun out of his control.
Well, that's quite serious. Well, thank you so much, Ali, for all of those analysis. Also, let's hear your views of all those headlines, especially
I'm not sure I have any so much view. I just want to warn Ali that the authorities in Tanzania have warned the media not to speculate about the whereabouts of President Magufuli. So you be careful.
Thank you.
That's interesting.
I said, don't speculate where Mr. President is. Remember, the president of Cameroon, Paul Biya, was away for months. And he was just, and look, nobody is allowed to ask, where is he? Was he in France, wherever? Nobody knows, but this is Africa, by the way. It's a Friday, let's move on.
And this is Frontier Africa Market Reports. Let's move on to the Western African headlines. We've got OPEC cutting outlook demand for its oil over the next 2 quarters. UTM Offshore okays to install a floating liquefaction at Yoho oil field. MTNN NGN100bn Series 3 and 4 commercial paper opens at 4.75% and 5.733% respectively. BDEAC Noutong Holdings to build 3-star hotel in Cameroon for in a 1.75 billion CFA deal. Then you have Ghana inflation hitting 10.3%. For the local stories first, let me come to you, Omotayo, and get your perspectives of these headlines that we have. MTN, you have that before you. You also have UTM offshore story there, and of course OPEC, which is a big picture.
Okay, thank you very much, Sampo. I'll start with the OPEC story. And so following the meeting last week where it was decided that supply cuts basically have to be maintained, we see that recently, that was yesterday, in the monthly oil report by OPEC, it decided the forecast was revised for Q2 2021, Q3 2021, Q4 2021. No, Q4 was actually increased. And basically the reason for these revisions, about $0.7 million barrel per day for Q2 2021. And then for Q3 was revised down to about 0.4. And this is largely according to the OPEC due to the ongoing lockdown restrictions, and also due to the voluntary social distancing that is currently going on in certain places, and so they don't expect demand to grow as much. However, it was also stated in the report that going forward, particularly in the half year of 2021, we see demand to increase, and this is on the back that economies in the world would have recovered from the effects of the pandemic, as we'll see more traction with traveling, with the ongoing vaccination campaign. It is expected that there will be more social gatherings, there will be more traveling, and when people are traveling and there's transportation here and there, it means that there will be more demand for oil prices. So that's basically it about the OPEC cut. But however, the interesting thing is that this morning in Nigeria, fuel price has increased to about 212. I mean, but then it is what it is. So going on to the next story about UTM Offshore Limited getting licensed. This is a very interesting development, particularly as the government, we've seen through the national gas propaganda or campaign or scheme rather, to exploit Nigeria's gas potentials. So this is a very good development, as UTM has been licensed to carry out and execute the first liquefied natural gas project at the Yoho field. The Yoho field currently is owned both by the NNPC and ExxonMobil, and it is expected that this would contribute to the current gas reserves that we have. Also, with respect to Ghana's inflation results that was released by their Bureau of Statistics, it's also, inflation everywhere, or rather in most West African countries, is on the high. It's increasing, and this is due to, yes, the effect of COVID, the fact that governments are pumping in money via monetary and fiscal stimulus to spur economic growth. And the reason for the increase in Ghana's inflation from 9.9 to about 10.3% was largely due to the non-food sector, or component rather, and that was particularly the housing unit that ticked up about 23.4% due to the cost in rent. I would leave the rest for Luke to take over.
Thank you for being so generous. What are you? Luke, over to you. You have to fill your car to get to work, as we are beginning to see vaccination taking over now. We're seeing folks resuming work. Talk to us about how this whole forecast of OPEC and the new developments in Nigeria will be affecting the downstream space.
Okay, yeah, so far, the recovery in oil demand has been slower than expected, really. And that's because, late last year, we saw a spike in COVID-19 cases, and that led to the imposition of lockdowns in some countries, especially the advanced countries. So the impact of that is still playing out in that space, and that's why we've not seen like a significant recovery in oil demand. So really what's supporting oil prices currently is not really a reflection of improved oil demand, rather is more of OPEC cuts. So maybe in the second half of the year, if we see better than expected rollout of vaccinations and softer social distancing measures, then we might likely see significant recoveries in oil demand. Then on this story regarding MTN raising 100 billion naira CPs. So this is quite interesting about MTN, because when the company got listed on the Nigerian Stock Exchange, it got listed through listing by introduction. So what that means is that the company only listed just to create an awareness that is now a public limited liability company. So the company did not really do any IPO, it didn't raise any money from the Nigerian capital market. The reason was that then valuation was really low, but now valuations across board, are relatively high. So you'll be expecting companies to come and get listed. But given that interest rates are still at very low levels, a number of them are not really looking at the equity markets to raise capital. So, and that explains why the MTN is also taking this route. So raising CPs at 5%, 7%. That's more like that's like one of the cheapest interest rates you can get in this world. So we'll see that play out more in that space, not just for MTN, for a number of companies. We've already started seeing it since last year. We saw it with likes of Dangote Cement, Nestle, and Jewelries. So a number of these companies are just taking advantage of this low rate. That's just what MTN is doing as well.
All right, then. Thank you so much, Luke. Let's move on to the Southern African markets, where we've got SA mining outputs declining by 6.2% year on year. In January, it was 4.5% month-on-month rise in activity. Mauritius SSA's best economic freedom ranking in 2021. Person will help us to understand this economic freedom index much better. Still with South Africa, you've got the Bank of America Merrill Lynch raising 2021 economic growth forecast to 3.8% from 2.9%. Glencore says its chairman Hayward is stepping down by next year, and that'll be at the next AGM. Standard Bank headline earnings per share decreased by 43%, and Sanlam says new business volumes increasing by 25% for the year 2020. And of course, Namibia trade deficit is at $225 Namibian. Bosun, let's get your thoughts on these headlines. More significantly is the economic freedom ranking.
Yeah, so, okay, this was part of a report released by the Heritage Foundation in the United States. It was published by AZA. This is a currency, non-bank currency brokerage firm, which was in their weekly FX report. And what the whole report did was to look at economic freedom all over the world, globally speaking. But for sub-Saharan Africa, what the report says in summary is that there's economic freedom happening in Africa in terms of how governments are trying to open up businesses, getting permits. For example, if you want to erect a building, and you want to do import and things like that, you want to start production. So that's what we call the economic freedom, as it were. So a few of those indices were there. Mauritius still retains the best in terms of that. Morocco is the best in North Africa, outside sub-Saharan Africa, and the number 81 globally speaking. And that speaks a whole lot for Morocco there, among the top 100 globally speaking, not even outside Africa. So that's what essentially what the economic freedom index ranking by the Heritage Foundation in the US was all about.
I appreciate that, Bosun. Ali, let's come to you with some of the corporate headlines you've got there. I mean, you said Hayward, the chairman of Glencore, has got a whole lot more work to do, having been at the helm of affairs in the last 9 years.
Yes, obviously Glencore, one of the top commodities traders worldwide, big player in Africa. It's an important announcement and has ramifications for many countries across the continent. Glencore, of course, went practically, the share price collapsed last year, I remember, around this time, and then experienced a tremendous rebound as the prices of commodities rallied over the next few months. Standard Bank, I looked at those results, and Shashabala was extremely bullish, actually, in his comments, talking about expanding further in West Africa. He said he was looking at Ethiopia. He spoke about how 20 years ago, a banking financial services business in Africa seemed a long stretch, and today people understand what the plan is. And my experience of Standard Bank is they've built a very interesting franchise. It's resilient, it's muscular, it has a very good skill set and understanding of the environment it operates in. And I, for one, I think that, if you're looking for Pan-African banking exposure, and this is now the holy grail for many banks, a few in East Africa, many in Nigeria as well, I think Standard Bank is ahead of the pack.
Great, thanks a great deal for these, Ali. Moving on now to the Northern African headlines. We've got economic freedom improving in sub-Saharan Africa. Morocco is best in North Africa. Bosun broke that down earlier. Egypt's total external debt up some $125 billion in the first quarter of this year. Tunisian exports fell by some 12.1%. Moroccan equipment companies, stock this turnover dipped to by 20% to 258 million dirhams in 2020. And you have fintech company based in Cairo, Daira, raising $3 million in pre-seed round. And okay, so quickly, I'll get your thoughts on some of these headlines. Matayo, we touched on an understanding of the economic freedom earlier. I mean, what does Nigeria need to quickly do to get on board or get some top ranking in this index going forward?
Okay, thank you, Temple. You know, some of the metrics for the economic freedom includes rule of law. Countries are assessed based on that, independence of judiciary, property as well. There's also the part that talks about open markets, the investor freedom. There's also the metric that relates to government spending and all of that. You know, basically in Nigeria, we need to check ourselves, like do proper homework when it comes to integrity issues. That's a really huge concern to foreign investors, particularly if you want to see an uptick in that area. You know, also when it comes to things like corruption, when it comes to things like stability in policies that would spur growth, we need to do our homework on that. So those are the things that I believe if we fix, we can see ourselves move from, I think we're about 105 on that rank, you know, upwards. Thank you.
Thanks a great deal, Matayo. Ali, how do you intend to trade these headlines in the Northern African space today?
So the one that obviously caught my attention was Egypt's total external debt topping 125.3 billion. It's a pretty big number optically, but really, you know, what I would say is a lot of our African countries sized up, supersized their external debt. And the lesson I would tell them all is go to Cairo and learn how these guys manage international markets with this kind of external debt. They are so accomplished, and you know, and it remains one of the prime destinations, not just for frontier investors, but for global investors looking for yield pickup. Egypt is the premier destination. And the reason for that is not only sensible economic policy making, grown-up thinking, but an ability to speak to the markets in a sensible manner. And whether it's in Lagos, whether it's in Abuja or in Nairobi or wherever you care to mention, I think a lot of our policymakers could learn a lot from the Egyptians.
Thanks a great deal for that, Ali. Luke, it's the last trading day of the week. What do you think we should watch out for as investors, journalists, analysts across board?
So it's been more of bearish sentiment in the Nigerian equity market so far this week. Today being the last trading day for the week, it's likely we might see some more of bearish trading, and that's because investors are still taking profits on gains recorded late last year, and more so given the fact that for some companies that have released their results, we've seen like a cut in their dividends, and that has also been impacting trading sentiment in the stock market. So overall, we expect to see more bearish trading. However, for companies like WACO, where investors have like positive expectations for in terms of their full year 2020 results that have not been released, then the expectation is that we might see more of positive trading sentiment on the stock. Overall, we expect the market to close down today.
Many thanks for that, Luke. Thanks a great deal. Person, any final words?
Yeah, just a quick question. I just want to ask Luke very quickly. In terms of the petrol prices that is now, whether it is 162, 170, or 212, what would it mean for the oil retailers? We've seen MRS forecast, we saw Eternal Oil PLC. These are small retailers, by the way. Whichever way things go, do you think investors should keep an eye on these stocks listed on the NS? What's your thoughts, Luke, first, before Matai also respond? That's my question. I'm just scratching on that.
Okay. Thank you very much for the question. That's an interesting one. So in September last year, the government announced that it had now fully deregulated the sale of PMS in the country. But since the start of this year, that hasn't been the case. I mean, the open market price for PMS in January was around 180, and oil marketers were still selling PMS at 162 naira per liter. And just recently, that was yesterday, the pricing agency released its templates for the month, announcing that the open market price of PMS should be around 212 naira per liter. But from what we could get from these oil marketers, the government is still willing to sell PMS at 165, 170 naira per liter. So clearly, what that means is that the government is absorbing losses. So that's, in a way, indicates the return of subsidy back to the downstream space. So the implication of this for the oil marketers is that we are going to see margins likely declining from the levels we saw in Q1 and Q2 last year. Q2 prices were low, so we are like, oh, market is fully deregulated. We are tracking oil prices. It's increased from 122 to 125, but margins were actually very good during that period. But with this new pricing regime, it's likely that we might see a decline in gross margin for these oil marketers. And for these oil marketers, really, their business is a volume business. So a 100 basis drop in gross margin can have significant impact on their bottom line. So what this means is that if we see gross margins declining by maybe 50 basis points or even 100 basis points, we'll see earnings dropping alongside. So 2021 might not be a good year for the oil marketers if the government decides to, keep to have subsidy back in the downstream space.
Right, and thank you so much. Tayo, any comments on that as well? You mentioned
I said it all. I align my views with his.
All right, then. Thanks a great deal. I appreciate that. Let's go back and have a wonderful weekend. This has been Frontier PL. So today, thank you, Ali Kansaki, for joining us from Nairobi, Kenya. Thank you, Motayo from Greenwich Merchant Bank. Luke of Capital Management. I appreciate your insights. Bosan Mofaye, Executive Editor here at Frontier Africa Reports. Thanks a great deal. I'm Temple Ashaju. Have a lovely weekend, ladies and gentlemen. Bye for now.